This short video will be about my client's current number one risk management issue, cybersecurity. The concerns, the issues, and most importantly, some solutions, both technological and more financial, and how you can implement them. We'll also provide one opportunity where the threat of a cyber event can help you. I'm a fellow of the Casualty Actuarial Society, member of the American Academy of Actuaries, and Chartered Enterprise Risk Analyst. I've worked with consulting firms, including what is now called Willis Towers Watson, which was the biggest in America when I was there. I've also worked in reinsurance, and we became the largest reinsurer in our market. I'm now at the boutique firm, the Actuarial Advantage, specializing in risk management solutions for self-insured entities, along with small and medium-sized insurance companies and expert witness testimony. Because of my clients' concerns, I have developed a special interest in how cybersecurity interacts with risk management and enterprise risk management frameworks. Indeed, it seems a new cyber event hits the headlines every day. I compiled this table from Google. There are some huge numbers. Column 3 shows the ground-up cost, the entire amount of the loss, including any insured portion. Column 4 shows the insured loss, or the portion of the ground-up loss covered by the insurance. Different websites give different losses, which would explain if you have different numbers. Also, this presents a risk management problem. If you can't fully discern the loss after it happens, how can you estimate potential losses before an event? Another source of risk is how well would your company deal with a cyber event? It's obviously difficult to know until it happens, but many IT professionals are holding their breath. For these reasons, interest in risk management around cybersecurity has grown exponentially. The Google Trend graph shows the increasing levels of interest in one possible solution, cyber insurance. Brokers and underwriters from D&O, GL, and other professional lines therefore need to understand the coverages available. Different companies will have different concerns based on their size, what data they keep, for whom, regulations in their specific industry, and many other factors. Making issues around cybersecurity even more challenging is the evolving nature of the risk. There are many different methods of attack already in use, and as technology evolves, so will criminals' ability to exploit weakness. For instance, Jeeps can be controlled by a neighboring car on the highway through a hack into the head unit. What's next? Pacemakers? 3D printing? For all these reasons, cybersecurity is now a boardroom and C-level issue. So what should we do about it? I think cybersecurity is a very good example of the difference between traditional risk management and enterprise risk management, ARM. In traditional risk management, the responsibility rests with a select few, here the IT department. It can lead to decisions optimal to that department, but suboptimal to the firm as a whole. For instance, at a previous company, the IT department introduced a policy, without any consultation, that only IT could use the database. I used the database a lot before this in my pricing role. I would create queries, views, etc., and then save them, tweaking them if necessary. After the change, I would have to hand in my request to IT, who would fulfill it in a day or two, and then I had to see if it needed tweaking. This policy turned an afternoon's work into a 5-day exercise. Similarly, they made a rule you couldn't export data onto a stick. This made it impossible to share data with our clients visiting on site. But at least I never worked for the Singapore government. They eliminated their employees' internet access entirely. Enterprise risk management attempts to optimize risk rather than eliminate it whatever the cost. For technical solutions, IT works across departments to jointly decide what precautions make sense and what don't. For risk mitigation in case of an event, ERM works with the board to establish insurance coverages in line with the board's risk tolerance and risk appetite. Technical solutions are still very important, and companies are using various tools to reduce their risk. The most effective tool will depend on the exact context of the company, the sensitivity of the data they hold, if they accept online transactions, etc. One important solution is the continual updating of old patches. It's often free, and old patches are a large source of breaches. IT should be in charge of this process. Typically, they directly update all computers on a weekly basis at a convenient time for all, for example, 3 AM on a Monday. Because cybersecurity is an evolving risk, IT will need to monitor security of new patches. If there are any breaches, it's likely to be publicized quickly on the internet. For me, one underexploited risk mitigation tool is training. Many companies use employee training in other areas, worker safety, sexual harassment, to reduce losses. Many employees have never had training in cybersecurity, despite working on a computer much of the day. Would employee training reduce your exposure? As an actuary, the risk management solution I work with most is insurance, whether through coverage from an insurance carrier or a self-insurance entity. Traditionally, any cyber insurance coverage was buried in general liability. As it became more visible, it was called out as a specific endorsement and is now offered standalone. You should check limits carefully to make sure that you have enough coverage. Many insurance companies are offering cyber insurance policies with limits that will not cover a major breach. A major data breach costs a lot of money, as we saw earlier. Target's limit was around $100 million per occurrence. Since the final loss from the hack was around $250 million, they lost $150 million. I'm not suggesting everyone needs $250 million per occurrence limits, but we need a handle around risk, and you need to be comfortable with it. For instance, I used to do a lot of Florida property insurance work. Clients have told me they are comfortable not reinsuring above a 1 in 125-year event, so they have a 0.8% chance of insolvency from a catastrophic event. They know that, and they're comfortable with it. You need the same level of knowledge and comfort with cyber insurance. You should know the chance of a cyber event that exceeds your limit. Ask your broker for the chance of a claim above the limits you currently have, since they should give you an answer for free, or at least you're paying them already. If they won't provide an answer, or for a second opinion, you could ask an independent actuary. You may wish to take high deductibles yourself and use the savings to purchase high limits. Insurance or reinsurance are not cheap. Loss ratios are currently low, as insurance carriers worry about a cyber catastrophe. Rates are coming down, but they're coming down slowly. Finally, I promise a solution that can help financially. Gaps in cyber coverage, e.g. deductibles, self-insured retentions, exposures above insurance limits, can be self-insured in an enterprise risk capital captive with a host of tax advantages. If your company isn't big enough, a multi-parent captive or joint insurance fund can be arranged. The best setup will depend on a host of factors, and it's best to discuss it with someone experienced with captives. That's not my particular area of expertise, but I can provide names of some people who have done a good job for my clients. The tax advantages of this type of arrangement are so advantageous that sometimes have appeared on the IRS's Dirty Dozen. However, the IRS has lost cases on this, and it's difficult for them to argue cybersecurity events are not a risk. They've been hacked themselves at least twice. In conclusion, cyber events are a dangerous, evolving threat that can make a company insolvent. In addition to technological solutions, you need sound financial risk management, including an accurate assessment of the financial risks faced and a broader discussion of whether you're comfortable with that risk as part of your risk profile. Thanks for watching. Feel free to ask any questions below. I wrote a paper about cybersecurity and cyber insurance for the Society of Actuaries and Casualty Actuarial Society. Drop me a note with your email and I'll send it to you. I'm planning to present on this topic at the 2016 CAS annual meeting and 2017 MIMS meeting. I'm also presenting the general session at the 2016 CAS ERM seminar. Maybe I'll see you there.